Personal loans and startup funding. Personal loans for business use are essentially personal loans that are used for business purposes. These loans are typically issued based on the borrower's personal creditworthiness rather than the financial health of the business. They can be obtained from most banks, credit unions, and online lenders. Use cases. Personal loans for business use are often considered by business owners when they are starting a new business, or when their business doesn't have a long enough financial history to qualify for a traditional business loan. They can be used for a variety of business expenses, including startup costs, inventory, equipment, and more. Best suited for. This type of loan is best suited for small businesses and startups that may not have the financial history or business credit score to qualify for other types of business loans. It's also a good option for business owners who have a strong personal credit score. Typical loan amounts. The amount offered for personal loans can vary widely depending on the lender and the borrower's creditworthiness, but they typically range from $1,000 to $50,000. Pros and cons of choosing a personal loan for business use. Pros of choosing a personal loan for business use. Easier qualification criteria compared to traditional business loans. Flexibility to use the funds for a variety of business expenses. Personal loans can be obtained quickly, often within a few days. Cons of choosing a personal loan for business use. If the business fails, the borrower is still personally responsible for repaying the loan. Personal loans may have higher interest rates compared to business loans. Using personal loans for business purposes can blur the line between personal and business finances. Qualification criteria. Qualification for a personal loan is typically based on the borrower's personal credit score, income, and debt-to-income ratio. Lenders will also consider the borrower's employment history and sometimes the purpose of the loan. The minimum credit score required can vary by lender, but typically a score of 600 or above is needed. Typical repayment terms. Repayment terms for personal loans can vary, but they typically range from 12 to 60 months. The interest rate can be fixed or variable, and there may be penalties for early repayment. Real-world example. Let's consider a hypothetical business owner named Alice. Alice is starting a small online retail business and needs funds to purchase inventory and set up her website. She has a strong personal credit score, but her business is new and doesn't have any financial history. Alice decides to apply for a personal loan for business use. She uses the funds to purchase her initial inventory and set up her website. As her business grows, she makes regular payments on her loan, maintaining her strong personal credit score and eventually establishing a good credit history for her business. In the next lesson, we'll learn all about use cases for working capital loans. If you like this video, be sure to check out the rest of our course on building business credit at mybusinesscredit.com.